It was a rather flat week for gold and silver, unless you count the action at the Olympics here in London. Indeed, watching the Olympics seems to have become a distraction for some traders, those who are not on their summer holidays, that is. Volumes have been thin, and these really are the dog days of summer. Friday saw a bit of a rally in early US trading, as gold and silver followed the euro higher. Friday afternoon's London gold fix, meanwhile, was $1,618.50, a 1% gain for the week. Friday's silver fix, which took place 3 hours earlier, was $27.88, a 2.3% weekly gain. Thursday and Friday saw Beijing release another glut of economic data, all of which provided further evidence for the China slowdown thesis. Here in London, meanwhile, the Bank of England published its quarterly inflation report on Wednesday. As was widely expected, the bank cut its forecast for UK growth and sees growth being more or less zero for 2012. Employing an Olympics metaphor, Bank Governor Mervyn King said that the economy has not yet reached full fitness. He added, however, that the world's central banks still have their foot to the floor in terms of stimulus measures, following a period of unprecedented monetary easing over the last 5 years. Attention has now started to focus on the annual Central Bankers Conference at Jackson Hole in Wyoming. It was at Jackson Hole 2 years ago that Federal Reserve Chairman Ben Bernanke dropped the first hints about QE2, the second round of Fed quantitative easing that began later that year. Understandably, analysts will be closely watching this year's conference for any similar hints, though we expect they will probably be disappointed. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.